Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, February 12th, 2020. In this video, what we'll do is take a look at the energy sector. Primarily, we want to focus on the energy MLPs. Those are master limited partnerships. That sector, as I highlighted recently, has just been beat down. A lot of those stocks taken out to the woodshed. So that those deeply oversold readings, which creates, sometimes creates good opportunities, coupled with the fact that, I'm bullish on crude. I think that there's a good shot, whether we have to base around here for a while or that basing is over with. I think there's a good shot that we may be at a pretty important inflection point in crude. So we'll start there. Obviously, if we can align the outlook for the crude oil sector, align a bullish outlook, it will help make the case for some of these stocks. So what I'm going to do is go over that, give you some trade ideas, and it'll sort of be an overview of the sector, and I will narrow down and probably add some of these as official trade ideas. But what I always say, if I like a sector, I like a stock, I'm going to tell you, and it is a lot more efficient for me to cover these in a video for two reasons. Number one, it's multiple trade ideas. Some of you might want to diversify among different positions in your account. The other thing is also to take a look at the sector, because if I throw out, and I'll tell you this too, this is something I learned over the years. Let's say you are bullish or bearish on a gold mining stock, right? You really like it, Kramer's pounding it or whoever you listen to, and you look at the chart and it looks pretty good. The fundamentals look great, everything you're hearing about it. However, at that point in time, if you were to go over, and this is what I recommend, look at the charts of gold. Number one, is the chart of gold bullish? If the chart of gold happens to be, an outlook happens to be clearly bearish, it's in a bearish technical posture, and then likewise GDX, the miners are going to follow gold, and then you go through the components of GDX, and the majority of those stocks have bearish looking charts, they're in downtrends. You may want to pass on that trade. There are certainly companies that can buck the trend, and we'll even highlight a few examples here, but for the most part, birds of a feather flock together, and there's no reason to try to swim against the tide. It makes a trade a lot easier if you can align a bullish or a bearish outlook on a trade idea that you're looking at, whether you're looking to go long or short something. Ideally you want to be able to align it with a bullish or bearish technical outlook in the sector that it belongs to, especially if that stock has a high correlation with the sector. I need to put a little asterisk there as well, because there are some, again, that companies might be grouped into a same sector or industry, but one company may have a different business model, or maybe just an outright phenomenal business plan, and they're executing and firing on all cylinders, even if they're selling the same product or service the other ones are. So I just want to say there are exceptions, but look, as a general rule, again, make it easy. Trading can be hard enough as it is, trading and investing. Why not put the odds in your favor and align your trades with a bullish or bearish sector? So we're going to start out with crude. I won't spend a lot of time. I've covered it quite a bit recently. It's an active trade on the site. USO, this is the non-leveraged ETF, so you're not going to have the decay like UWT and DWT and all those leveraged ETFs out there. And so the story of this is pretty simple in three words. Oversold, deeply oversold, as a matter of fact, right here. Last time we were this oversold. These points down here, right around there, actually went through there, and then became oversold again with strong positive divergence. So oversold there, as oversold as we are now, and here we are again. And then more importantly, I'd put the highest weighting on this very well-defined support. This goes back all the way into, we had reaction, quite a decent reaction there in 2018, and then remember what this was is the market melted down, the stock market melted down. So you had forced liquidation. A baby gets thrown out with the bathwater in market meltdowns, and that's what we had back in late 2018. And so everything, the pendulum, as it often does during those corrective phases, or again, meltdown type sell-offs, it swings a little too far. And so you can see oil didn't spend a lot of time down below there. It was about less than a month, just a handful of candles, a week or so. maybe 10 days down into the low and then immediately snap back right back up. So one way to look at that, other than factor in what was happening. Again, it was a meltdown, forced liquidation. That's not a natural. That's not where oil should have went. If it would have stayed down there. It went right back up there and respected this level. And you can also call that a momentum field overshoot. But either way, enough reaction sense. And another thing that I take, I factor into my analysis. Throwing a lot of things here, getting off on a tangent, but I do try to pass along what I've learned over the years, is that I put a higher weighting on the more recent defenses or breaks, if you had it, of a support level. So really since then, since 2019, the beginning of 2019, every single time USO has pulled back to that level, starting right here in the beginning of January after it went up a little, pulled back. Those were great buying opportunities to get into crude. And so this one may not happen that way. Unfortunately, once you sometimes when you recognize a clear pattern, a clear price channel, a clear support level, that's when it stops working. But until then, here's the easy thing. Let's not try to overthink it. It's objective. You go long with a stop somewhat below, and that's that. So where I'm going with this again is that I'm looking not for a little bounce trade here. Sometimes I'll take a quick in and out bounce trade off support, get 2, 3, 5, 10%, whatever the security is. I'm looking at a potential bottoming play. And as I said before, especially if the stock market goes up. I just shared this chart with you guys the other day on the front page, looking at a very strong correlation between crude oil and the stock market. So in white you have SPY, the S&P 500 ETF, and then in purple you have the USO. And I always say this, when you look at these charts, I'll say, well, Randy, this one's way up here, this one's down. Don't look at the price differential. They don't trade on the same price axis. The S&P 500 and those stocks and crude oil are priced differently, and they also move up and down. What you want to look at when you're comparing any two securities is pay attention, where are the inflection points? Where are the trends? Are they both moving up at the same time? When you're comparing different asset classes, almost always one is going to rise and fall more during the rallies and corrections in percentage terms than the others. So that's why you're going to see this. But again, you want to look at where do they turn, where do they peak? One peaks and they go down. One bottoms and they go up. That's a relationship. And as I mentioned, the only other time we've had such a stark divergence, this is crude oil plummeting in recent months while the stock market continues to race up to new all-time highs. This is where the divergence started, right here. Other than that, it's been pretty darn tight. The only other time we've seen such divergence was right here. Both, market was rallying, all of a sudden crude started going the other way, and what happened? Crude played a violent game of catch-up to the market right there. And so mean reversions, as I said, can happen other ways. Maybe crude is telling us things that no one else is seeing, no other sectors, I should say, or junk bonds still look okay. They're not flashing any warning signs right now. Sometimes they are kind of the canary in the coal mine. Maybe crude is telling us demand's falling off a cliff. But maybe not. Maybe this is just an overreaction due to short-term supply and demand forces, and we're going to get that reaction, snap back or reversion to the mean. Or maybe crude is telling us something that the market doesn't know, and stocks are going to do that and play catch up to the downside. That is possible, and that loops back to what I said before. Why I'm not ever going to be that type of person that tells you the market or something must do this, must do that. I'll give you my opinion. I'll tell you when my convictions are strong, when they're not strong. But what I just say is, if it doesn't work out, then that's what stops are for. You don't go long USO, and hold it to down here. You don't do that. That's not proper trading. That's not proper risk management. You take your shots, take them objectively, and it works out or not. So we're going to move on to the MLPs. And again, I just want to reiterate that let's. I'm not even going to give you firm price targets or even some price targets on most of these, because the point will be time to maybe scale in if you are of the same mindset and you're looking for growth and income type trades. I'm focused on the MLPs because most of those pay very attractive dividend yields. And so before we get into that, what is an MLP? Just type in this website here. Oh, you can't see it. It's cut off to the top of the screen. It's EIC.energy. So it's not, you don't have to type in the www or the HTTPS. Just type in EIC.energy. and maybe a / enter. It'll take you to that site. You can go here to education and get to this page I'm at right here, MLP. What are they? I don't want to waste any more time in this video reading what you can read. I want to get to the stocks here, but you need to be aware. Some people gripe about these things because they kick out a K1. Again, if you don't know what a K1 is, I explain it in the FAQ page on the site. That's located under resources on the top menu. I talk about what is K1. And a lot of people don't like them because they tend to come later in the year, and your accountant's griping because your K1s don't come in January like your W2s and 1099s and all that good stuff. They usually kick out later, but whatever. To me, if that's your thing, then stay away from them. But again, if the trading opportunity is there, like I always say, if something has a ticker and I can chart it and buy it with a few clicks of a mouse, I will trade it. I don't care whether it's Bitcoin, which fundamentally I might have to have strong convictions and don't understand it that well. But as you guys know, I trade it, and I trade it long and short. Depending on the charts, and same with these guys here. So let's dive into the charts, and I'll let you read up about these. What we're going to look at is a watch list on the same website. You'll see here, you go down right here and you click on current MLP and MLP funds, and then you'll get something like this. You'll get a list. I'll follow up on this video if we continue to see the energy sector and these MLPs in the energy sector firm up. And you can go here and look around and see all kinds of different funds if you don't want to trade. The benefit of a fund, whether it's an ETF or a mutual fund, if you can find one in here, is that it's you get a shotgun approach. You're diversified. You only have to buy one security. And again, I may follow up with those later. What we're going to look at now are some of the individual names. Again, this list is on there. And what you can do is when you go into that site, by the way, if you click on these current MLP and MLP funds, you can download an Excel. That's what I did. And if you download an Excel spreadsheet, you'll get the names under Excel, and then you just highlight. I did the wrong one. All right, I'm going off on too many tangents here. I wanted the there they are right there. Nope, that's not it. I wanted yes, I did this one. Okay, I guess that already opened up. Let's try it one more time, and I'll show you how I did the watch list. All right, over here. Okay, this is what I wanted. I wasn't on there correctly before. It's an Excel spreadsheet. So if you guys know how to work Excel, just, click, hold shift, highlight them all, copy, and then boom, whatever your charting program is. I use TC2000 as one of my, several charting programs, and I just go and create a new watch list, cut and paste, just kind of an FYI on TC2000 and a lot of programs. If you go in there and you want to cut and paste the symbols into a watch list, you enter new symbol, and you're noticing it won't paste. Hold your control key down and hit V. That will paste those. It'll override that function where when you right click, it doesn't give you a paste option. So that's how I created the watch list. So now we're going to get to that, and let me show you. Here's what we're going to look at. So this is what I did is as I just showed you on that list, I broke down, and I have it was over half a dozen watch lists. I used every sector or subsector that they had on that list there. Let's go back to it right here. Remember, you had natural resources, and then this subsector of natural resources, oil and gas, and within that you have a additional subsector, the midstream producers. You have gathering, processing, compression, transportation, and storage. Scroll down. These are other midstream companies in marine transportation. Downstream, different type of downstream producers. You have oil field services, propane, upstream, all kinds of good stuff. Coal, you can see. So I'm going through these, and I just wanted to say, as I'm covering these MLPs, there are MLPs in different sectors. These are REITs, and they don't look as, these don't pop out to me. So we're just going to focus right now on the energy ones. I just wanted to mention that, and also show you how to create your own watch list there. So that's what we're going to do here. We'll start with this one, which is the midstream gathering, processing, compression, transportation, blah, blah, blah. And we'll go through some of these. I have them sorted right now, I think by today's gainers, but I'll share my thoughts. And this is probably, we'll just start here because this is where some of the best ideas jump out to me. MPLX. What do I see there? Well, I see nice bullish divergence right there. I see the PPO curling up. So that divergence, although it's not in my book, this is just me, I consider it confirmed when you get a bullish PPO crossover, because that's effectively put in a lower, a higher low. Right now, that indicator could keep going down, but this is what a bullish PPO crossover looks like. This is what it looks like. So right now, yeah, price is making a lower low, and look at that reversal off there. So I know some of you, there's been quite a bit of interest in these, and so I'm sure some of you started probably taking positions here, and it's not coincidence a lot of these guys are moving today. This one's up 5.6%. I'm going to say this, that have right up just cut off in the corner here. Here, I'll move it over so you can see it. TC 2000 will list the dividend yield, but I take that with a grain of salt. Sometimes that's not accurate. Any charting program may not be accurate, so you want to check. You can check Yahoo Finance, some other sources, and if you want to get a true an accurate number of the dividend, just Google search, say dividend MPLX. You'll have something come up. Some of the first hits will be from the NASDAQ. It'll show any security's dividend history. Take the last dividend and then multiply that by 4 if it's a quarterly dividend to get the annual rate, and divide it by the share price. You can come up with the yield yourself to verify it. And then I say this often, you have to be careful. They call it a dividend trap or chasing yield. Companies with a very high dividend, you need to be skeptical. There's a reason this one, if that is the correct dividend, nearly 12%, there's a reason it's 12%. And almost always that is because the company is either in a precarious fundamental position as far as it being an ongoing concern, and or more likely their dividend is in jeopardy. That's not a solid and secure dividend. You're not going to have a AAA rated company paying a 12% dividend when they can get away with paying you a 1% dividend. That's just how it works. Nobody's going to give you anything more than they have to. So companies that are paying a high dividend yield tend to have a higher risk. Now these guys, due to their tax structure, often can pay and usually do pay a higher dividend yield. And again, that's all about MLPs, and that's why we're looking at these, because they tend to be high dividend paying companies because of the way they're set up, passing along profits to, of course, the partners, whoever owns the shares. MPLX, that's it, nothing more to say other than if crude is not over, makes another run at those lows, even breaks those lows, maybe this wedge type pattern expands. So there's that whole, what I call second mouse thing. As you guys know, I like to step in quite often and try to catch tops and bottoms. Sometimes that works great. That's where the biggest moves come from. When you can nail a top or a bottom, often the biggest gains come in the beginning. By the time everyone realizes something like crude, for example, has bottomed, it's already up 10, 15, 20%. That's when the Wall Street Journal starts talking about, or they talk about on CNBC, get into crude and all that. Now, the downside to that is, quite often the second mouse gets the cheese. So you can get in first, you can be another leg down, and so that's what I'm talking about doing here. My preference is, what I've started to do is a scale-in process, nibble on little bits. How might you scale in? Let's just say, and again, I'll keep an eye on these individual charts and crude, but you could take, let's say, a quarter, anywhere from a quarter to a half position around current levels with crude here, and then add to that over the next few weeks if the charts continue to firm up. You don't want to add if USO drops below here, and if these MLPs start looking not so nice, if they wipe out, like for example, we'll go back to MLPX. What would I want to see? I want to see continued gains from here. This is a big green candle. I don't want to see that candle wiped out. Now, if it was, it's not going to completely negate this bearish or bullish technical posture. There's still positive divergence, and still would be if this thing turned around and maybe along with crude and went on to make another low. We might just extend the divergences and work our way down within the wedge. So by scaling in, if they continue to rise, at least you have a partial position here, anywhere from a quarter to a half, maybe a third, it's up to you. And then you can add on as the charts firm up. But that also leaves you enough room if you do want to scale down, if that's your predetermined plan. I don't scale down on a position to lower my cost basis. on a losing position in hopes that it's going to turn around. I will only do so if that's the charts are still constructive, and my plan originally was to scale down on that position if it went a little bit lower. So that's the MPXL, one of the better looking ones, I think. And targets, I'll just tell you right now, I don't see a whole lot stopping it until this downtrend line and intersecting 2610-ish resistance level. And that would be, if it took a while to get there, about a 10% run plus. I don't know how often that dividend pays out, and if that is indeed the accurate yield, 11.92%. But so either way, even if it chopped around a while, that's the thing about this. If crude just stabilizes here and trades on that support, and these guys chop around within this wedge for 6 months or a year, you're getting paid, well in excess of what most other stocks are paying, with that 12% or so dividends. So that's the other advantage to having these growth and income stocks. What I'm not interested in right now, and that's why I'm not talking about it, is things like gold. Gold, I think, is in a bull market. I think it goes higher. It'll be higher within a year, probably within 6 months. But when you get in these consolidation areas, you're not getting a dividend. It's dead money. So that's why these growth and income trades are nice, because even if you don't get the growth out of them, you still have some type of return on your money. All right, let's go back to that list. Next one up, SMLP. And I'll go a little faster here. I know I'm talking fast. I want to get this out. I want to get back to trading. I want to get looking at the charts, find some more setups. But that's same story, and this is going to be the consistent theme here. Not all, but most of these have this potential bullish divergence, and so these are potential bottoming plays here. This one, you can see the levels I have marked, about 295 first resistance / target, and then after that you have the downtrend line, and then 370, and then 433. So those are all potential targets. And let's see if I see anything. I can't make a strong case on the weekly chart. Like I said, this sector is in free fall, and so make no mistake about it. These are we're trying to catch a falling knife here, and if I get a little more confidence in the sector, or a little more confidence in any individual stocks, maybe I'll pass them along as official trade ideas. But I'm throwing them out now. And you guys can decide whether this is something that you're looking for in your portfolio, or maybe not. Maybe you like those explosive biotech stocks that can go up 35% in a day, and because these guys aren't going to do that. EPD story on this one, you can see some notes here. You have the PPO curling up, poised to make a bullish crossover from low levels. You get these low-level bullish crossovers like that, and that often marks significant turning points. You also have this one right at, or just recently hitting the support here around 25.28. That was that previous reaction low. If it takes another thrust down, and that's why, again, I'm not all in on this sector. If it took another thrust down, and a lot of times you'll see that when a sector has been in free fall, you get an initial bounce, but the bottom's not in yet. You get that final washout move that just, the last of the longs that have been, in this one and feeling the pain, they throw in the towel there. You get some shorts that jump in on the breakdown, and then you get that reversal and the shorts get squeezed out. So that is a possibility. And like I said, we could certainly do that. And if so, what that would do is give us a divergent low, and that would look even better. Something like this, have positive divergence here, at least on the RSI. And but we may not get that, and that's why I'm not waiting for that. If I sit there waiting for that, we already hit the support. Crude's at support. These guys could take off here, so I'd rather have some skin in the game right now, and then add to it again if the charts firm up. Nice looking. Look at that head and shoulders topping pattern on that one. Beautiful pattern there. If you guys trade these kind of chart patterns, that is what you want to see. It's on the daily time frame. It occurred over a period of several months, which is really ideally what you want to see. Breakdown from the neckline, and then probably a darn near close measured to the measured target of that pattern, which is the highest point from the head down to the neckline. You add that to where the pattern broke down below the neckline. That gives your measured target. So I wish I would have saw that one back then as a short trade. But I'll tell you, I'm not a big fan of shorting high dividend paying stocks, because when you're short a stock, guess who pays the dividend? You pay it. So I don't want to, really be in those for many months, because it kind of offsets some of the price drop that you have there too. I prefer these growth and income trades on the long side. PAA. Plains All American Pipeline, nice potential divergent low there. Same story. It had a trend line here and support. I think we took this one long back here before, if I'm not mistaken, on that break of that downtrend line, and it rallied up there. So same resistance level. That would have been the target or resistance level back then, 1939. So if this one can turn up here, you're going to come into some resistance around 1786. I don't know, this trend line, that was just a minor trend line. I wouldn't really factor that in too much unless it happens to come in with that 1939 level. So that would be, should it rally up there in time, you're talking about a 20% return. According to TC2000, this one's paying a dividend yield of 9.18%. Here, I'll move this over so you guys can see that dividend yield right there, this number here in yellow. On all of these actually. So ET, sometimes it won't show, sometimes they don't have the information populated. ET is showing about a 10% yield. What I noted here is some relative strength. It is in a downtrend like the rest of the group, but it hasn't dropped off as much as others lately. PPO is still just holding on there. That white line, the 9 EMA, is holding right around that 0 line, and that's usually constructive when a stock is trading, has the 9 EMA on the signal line there, trading above that 0 line. So if it can turn up here, it would keep the trend bullish, since it crossed over right here, crossed over that dotted line, the 0 line. Seeing bearish when it's below right here. This is all bearish. Little, was a little bullish, a little run right there. It told you that was a bull run, and told you it was in a bull trend here to here. And other than that, said bearish once it crossed down below there and stayed bearish to that point. And you can see it, got you out of there, told you to stay out. So that's one thing I'm looking at there. And the resistance on this one, you have the downtrend line is probably the most important. Plus you have the 200-day. You might not be able to see it, but if you put a 200-day EMA on your chart, there's a red line that comes in just right around there as well. So you have intersecting resistance levels. And look, bullish if it can break above there. It has room to run. So if we get traction, that might be months from now or at least several weeks. But we might look at these as longer term trades. EQM. EQT Midstream Partners, same story, divergent low, oversold, positive divergence, waiting to be confirmed. And again, I could play around with targets, but you can see, like I said, at this point in time, we're either at a bottom or near a bottom. So my thought process is the same, just scale in, because I'm not looking at these as 2-3 day or even 2-3 week trade ideas. I'm looking at these as several months or more. So we'll just see if the charts continue to firm up, and if they don't, and the whole sector takes another leg down and any reasonable stops are hit, I'll just step back and revisit the charts when they start to set up bullish, whether that's 3 months from now or 3 years from now. MMLP, nice divergent low so far. Potential needs some work, but this one could easily rally if the sector reverses or this particular company reverses. There's a big old gap right there. Bottom of the gap is natural resistance. That's at 319. That's about 37.5% overhead. Top of the gap. Technically the top of the gap is the bottom of that red candle there, but I have resistance there around 382 that I think that one would carry to if it can get into that gap, and that's about 67% return. Dividend yield, this is stating 39.5%. Who knows, maybe that's the case, but you got to be careful. Some of these are low priced. I can tell you in the past, really in the past 10 years, the energy sector has been in a bear market. Make no mistake about it. I know the stock market's in a bull market. The energy sector, crude oil, has been in a longer term bear market. Many smaller or sometimes they were formerly large companies are gone, bankrupt, and that trend, there will be some of those going forward. And that's why if you're going to trade some of these individual names, especially the lower priced ones and those with very high dividends. You want to spread it around. Don't put too much into those. Diversify, maybe one of 12, 10, 12, 20 positions, whatever you can manage in the sector, and then temper down those higher, the ones with the higher growth potential and higher dividends. Beta adjust your position size down, like I do for the TVIX trade, and things that have a high, very high return potential, but also very high loss potential. You take a smaller position size. In other words, you don't put as much money into this stock as you would put into Apple or Microsoft. You put a whole lot less because you don't need a lot in there. If you hit those price targets, you're not going to make, you don't have the potential to make 38% or 69, 70% in Apple in the next few weeks to few months, but you do in this stock. Then again, you don't have the potential to lose everything or close to it if this one, all of a sudden, goes to the wayside. So food for thought there, and let's look at a couple more here. Rifle through these. GEL, divergent low, same story there. Oh, and support, I need to add that. So this one, a case can be made on a lot of these, just like crude oil, and that's why I'm doing the video, to step in here, because you have, especially these, where you have these objective entries. Here's one right at support. I mentioned this sector the other day, and this one, a lot of these are falling to support. That's about 1772. If you stepped in the last 2 times that it hit that level, I'll tell you how much you would have made. This previous time from high to low, not that you would have caught the bottom and sold the top, but that's 25%. You can set trailing stops, and that would keep you in the bulk of the trade. That time around, it went up 36%. So, again, I like the risk reward. Take, risk 5, 10%, maybe even 15% on this one to make 40, 50% or more, and it'll either work out or not, just like any other trade. Oh, and then of course that doesn't even factor in the dividend. This one's claiming, showing me a 12.3% dividend yield. So, you get 50% price appreciation, and you've held it for a year. You got another 12% in the dividend. That's about 62% return right there. Western Midstream Partners LP. Look at a nice clean downtrend line in which to trigger an objective long entry. Actually, I'll zoom in tight. It actually broke it already and back tested, and it's rolling over now. That's how I should draw that line. You can pull it out the way I had it if you want to be safe, and either way it's a breakout. It's either a breakout and a back test as I had it just a second ago, or it's a breakout here. That tells me that is an objective long. Break above downtrend line resistance, positive divergence. First target 1756. I'm sharing these as unofficial trade ideas. It just would take me too much time to give, to sit down and study each and every chart and adjust these down. What I mean by that is the official trades, if it says T1 equals, it means I've studied the chart to see where would I want to step out if I want to take profits a little bit early in case the sellers step in early. In something like that, there's a gap down below, so to be safe, you could target the bottom of the gap. But I usually would come in just under where that resistance level is. So on this one, say 1739 or so. Even though the resistance line's at 1756. It's not a hard line, but that's where I think it's right about in the middle of that gap there, but on the bottom of these reactions. And then another target up there about 2083. Let's see, a couple more. CNXM. Nothing stands out on that one. It's not bad. I could probably draw a little downtrend line there, uptrend line. Same story, oversold. Like I said, birds of a feather, guys. So, either we'll get a, you can see most of these have been in free fall, and the charts on a lot of these look very similar. So that's the point. We're either we're going to see a bottom, or this is a dead cat bounce, bear market rally, and we go down. CQP here, Cheniere Energy. Yeah, no, positive divergence again, sector play. I don't see a solid support level. There is some support there because we had these reactions right here and reactions right there, and reactions from below. So yeah, the case could be made to step in there. It just hit support yesterday. PSXP Phillips 66 Partners. Nice. What's nice about this one? Here's one that completely bucked the trend. I've been showing you stock after stock that's been in a downtrend, well off the highs, and here's one that is in an unmistakable uptrend. We can add an uptrend line up top or try to do a price channel, but let's pull that off. And that's it. So the MO for this one is, not all my trades in a sector that's going down are bottoming plays, because some of those are the companies, again, that obviously don't have the best fundamentals, or they wouldn't be getting taken to the woodshed. So here's one, and maybe they're doing things a little different on their business model. But the MO here, the objective long entries, are pullbacks to support, meaning the trend line, with a stop somewhat below it. That's it. So that works until it doesn't work. We can make this as complicated or as simple as we want. So that's it. Keep buying that, and if it breaks that trend line, I don't see any divergence here or anything that tells me the trend's intact. And the trend indicator right now, the PPO is right around that 0 line, and it has been since here. So it's crossed over bullish. Again, the white line. Trying to draw an arrow here, guys. Bear with me with a line tool. That's that white line. Does a pretty good job of saying, okay, trend's been bullish, and you can buy pullbacks when the white line pulls back to the 0 line. Especially if you can coincide that pullback with a pullback to the trend line. I'd put a higher weighting on this trend line, I'll just tell you that right now, than I would on that. But when they both line up, all the better. MMP, Magellan Midstream's partners. Nice one here, because you have a big old symmetrical triangle pattern. There's your downtrend line, top of the triangle, here's the uptrend line, and we just hit it again. And so again, when you go with these that are fallen to support, if you can get them close to support, it's objective. You're not just taking a random shot in the dark, buying a stock in what I call no man's land. No man's land is a term I like to use when a stock is right here, smack in between support and resistance. That makes it hard to go, because the stock is going to gyrate back and forth in there, and you can certainly set a stop, but just the back and forth grind can stop you out. Whereas if you go in at support, it's objective. Stock's likely to bounce off support, and if it breaks support, then that's not good. So therefore, you should be stopped out if it goes much below that. I give it a little room. I don't put my stops right below, because every now and then the market makers, the powers that be, whatever the forces are, they like to clear out the stops, and then they turn around, and the algos, the big institutional traders, they push things down. To do that, to clear the stops, get you to sell, bring it down, they're going to turn around and buy your shares and ride it up. So those are called stop rates. So that's why you have a stop a little bit below the actual support level, not 2 cents below it. DKL, trendline support, same story there. Objective long off the trend line. TGP, 1246 support, price support. You can see it pretty good there. Ooh, nice. I missed that one back then. Maybe not. I can't remember. I've traded this stock on and off over the years. Nice inverse head and shoulders. I showed you guys a head and shoulders pattern before. That's an inverse head and shoulders, which is a bottoming pattern, a bullish pattern. And just like the head and shoulders, you take the distance from the peak of the head, the bottom of the head, to the neckline, and you add that to wherever the pattern breaks out, and that gives you your measured target, which would have come in around there. So and that's it. In this one, kind of bigger picture, if you see what's happened since, it's kind of chopped around this big range. So this is trading 101. It's not a well-defined range. The top of the range is not very defined, nor is the bottom, but for the most part, you can see it comes down here, you go long, gets up here, you sell it and get out or short it. Again, not my preference to short. I'm not showing a dividend yield on this one, but it may have one. You just have to look that up. I don't know. All right, ENBL. Could have another thrust down, maybe not. Probably depends on what the sector does. HEP doesn't stand out. Not going to talk a lot on it. USAC, nice one. There's support again. Objective to go long here at support. Even if it, you don't have to get the 15-14 level. It may not go back there. Depends on what crude and the sector does, but you can try to swing it all the way back up here at 1835, and if it gets there, you're getting paid 13.5%. Along the way, even if it chops around and takes a long time to get up there. SHLX, I haven't even marked this chart up, but I'll do that right now for you. Some support there and trendline support there, so you can buy it on the trendline support. If it breaks that, takes another jog down 1870 of support. You can kind of see it kind of boxed in here, with the top of the range right about here around the 22 level or so. So let me put a line there, right there. That would also be an objective target, and pretty powerful longer term if it breaks this level right here. You do have that previous reaction high to contend to, but this is what's capped the stock for a while. It was support back here. So longer term, if you want to hold on to this one and it can pop above 22 with conviction, especially clear that would be a very potentially very bullish longer term technical event that could send this one a lot higher. All right, NGL, support. That's it. Maybe hits it again, maybe not. Had a little spike down to it there, but you can see last time around it held right about here. That's about where it fell to now, right about that 962 level. So we'll call that a support zone. Potential divergence if it goes any lower. And there's the logical target. There's some resistance there in the middle you could target for a quick bounce. So I'll give you a line right there. But again, if crude has bottomed, or more importantly, if this sector has bottomed, the two, crude. Remember, these are some of these. This one's refining and marketing. Some of these, like a pipeline company. Pipeline company doesn't get paid on the price of crude. If a refiner, or not a refiner, a driller. If you're pulling oil out of the ground and you have wells, you have reserves, the price of oil doubles, your profits have gone way up. It doesn't cost you any more to pull that oil out of the ground. Turn the wells on, pay the people, pull it out, boom, huge gains, just like gold mining stocks. When the price of gold goes up, it is an immediate and dramatic impact to the bottom line. But remember, you have companies that are pipeline companies. They're getting paid for volume. They're getting paid to move natural gas or oil through a pipeline. They're not getting paid on the price per oil. So just keep that in mind as far as all these companies go, that again, they have different business models, and some are not as dependent on the price of oil or gas. New Star Energy NS trading range right there. Not much more to say. Wash, rinse, repeat. You ride it up to the top of the range, go long at the bottom of the range, or look for a breakout of the range. Nothing lasts forever. That is a very well-defined level, 29 change. If it breaks that level, that would be quite bullish. A solid break above there, especially if you see broad participation in the sector at the time. Otherwise, this is that won't last forever. Sooner or later, you break down, and when you break down from these ranges, you get those big moves. But again, if the sector is setting up bullish, this is what I'd be looking for here. So you might want to, this one, I have to say, it's not so objective to buy it just below resistance. The only way you might want to do that if you're really bullish on the sector and you want to position in advance for a potential breakout. But the most objective thing there is to let it break out and then go long once you see the breakouts occurred. All right, I could go on forever. There's so many of these, and like I said, my intention, I've looked at these charts over the last couple of days, was to pick my favorites, and kind of like my children here. You love them all. They all look good. They're not great. Let me take that back. I'm not screamingly bullish on this sector, but I do think it's worth it. Like I said, for the reasons, growth and income trades, which I've been, really trying to add more of those on the site for long-term investors and traders. But here it is, buy this one at support, trendline support, objective long entry, PPO is still above and turning back up right on the zero line. Look at that, it told me the trend since this point has been bullish. That PPO signal line, white line remaining above there, right there, or a little couple whipsaw signals. It's not perfect, but for the most part above there. And turning up now, but more importantly, trendline support. So it's that, again, at the risk of oversimplifying it, that's it. Buy pullbacks to support. When it gets away from there, you might want to take profits, or it's a growth and income trade, and it's also in an uptrend, so you don't have to take profits at the top. If it's doing this, it's okay to ride out those pullbacks if you're a long-term investor or trader. If I can get this line tool here. Just keep doing that. All right, we'll wrap it up here because as I look at this list, what happened is, did I spill over into it? No, I'm still in that same watch list I started. There's just so many stocks, I couldn't even get to them all. And again, there's even different subsectors in there. So I will continue to pour over these charts and highlight any that stand out. And maybe I'll see if I can find an ETF for you guys, because if you're not an active trader or you don't have a lot of time in this, your head is probably spinning with all these trade ideas that I've covered now. So we'll wrap it up here. And I'll continue to follow up as long as the sector looks good. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.